Okay, so welcome to the macro snapshot. We're recording this in the morning, of course, of Thursday, June the 5th, 2025. We had what the market took as some sort of slightly weak data yesterday. So let's have a quick review. As always, the daily shot's pretty good just to show the data. The private survey number of the ADP, actually, it's not a survey, it's real data from the ADP private non-farm employment. That was came in at 37,000 with a survey of 114,000. So as you can see here, that's sort of getting sort of lower and lower and lower. Now, this has a low correlation to the non-farm payrolls. Nonetheless, the ADP does look after 25 million. So 25 million different payrolls in the US. So it's quite a representative sample size of the private payrolls, and it definitely does seem to be weakening a little bit. The market took that in any case as a weakening. We saw the front end of the curve pushing much higher, so pushing down the yields. We also saw bonds in general having a bid. We saw the US dollar weakening, but we didn't really see too much weakening in the equity space, and I'll get back to that in a second. But so that's that. The other interesting thing in terms of the data yesterday, just interesting here, looking at the smaller and smaller pay increases. You see here that basically the pay changes are sort of not going up, and it's actually declining a little bit. So I wonder if that's a sign of sort of weakness. The other thing which got the market's attention more or less at the same time, so we had ADP at 8:15, we had ISM services at 10 o'clock. So it was like a double sort of dosage of slightly soft data, and that's what got the market's attention. If we look at the ISM services, which of course is about 70% of the US economy, we saw that that came in a little bit below the survey. You see the survey here was for expansion into 52. It came in just a shade below the 50 for the headline number. So the market didn't like that. Our new orders actually came in pretty soft as well. So this is a bit of a problem here that new orders were down. On the other hand, the employment number was relatively okay, was sort of solid above 50, so even higher than the expectations. And probably something which is going to be very worrying and concerning to the Fed is that the prices paid component, as you can see here, has been sort of upward trending. And in fact, the number we got was 68, so very, very high and higher than the survey. So I would actually say not completely dovish, or maybe we could say with a slightly stagflationary tinge to it. So it seems as though the labor market is slowly softening. The prices paid is remaining sticky at the minimum, maybe even going up a little bit. So this is going to put pressure on the Fed in terms of like what's going to get the Fed to cut, or cut at least more aggressively than the two cuts currently priced into the market. And I would say that really the inflation and the prices paid component has to go down until and unless the labor market shows a significant weakening. So at the moment, the labor market is quite strong and quite stable, even if it's weakening a little bit. I think the only thing which is really going to force the Fed to cut in the face of sticky inflation, possibly even more inflation caused by sort of the tariffs, and we see the prices paid components going up. In order for the Fed to sort of ignore that, they would have to see the non-farm payrolls number, I think, go down very, very low, 50,000, 30,000, maybe even negative. And at the moment, if it's just slightly weakening, I think there's no sort of reason for the Fed to ignore the inflation component of their mandate. We shall see. Now, in terms of data, we do get some interesting data today as well. Let's just go across here and look at the Bloomberg. What we've got the initial jobless claims. Now, you'll remember that last week, the initial jobless claims, we got 240,000, which was a bit higher than consensus. And the market didn't like that. They saw it as a sign, again, a contributing factor to the weakening of the US labor market. This week, we're expecting 235,000. Let's see what happens. Also, the continuing claims is going to be, apparently, according to the survey, about 1.9 million. The interesting number is always the 4-week moving average. And I've just pulled up the chart here, which is this one. So this is the 4-week moving average of the weekly initial jobless claims. And as we can see, it's at about 230,000. This is a relatively sort of volatile number. But one could argue that, over the course of the 4 or 5 months of this year, that this is gradually going upwards. Now, is this historically a problem? If we actually just go back, let's just go back in time and, get a little bit of context here. So we're at about 230,000 here. But as you can see, this is a sort of a glass half full or half empty kind of scenario. You could say that, it's trending upwards. On the other hand, you could say it's well below where it was in late 2024. whereas at 237,000 or even 2023, whereas up to 244, 250,000. And we won't go back to the COVID period here. That's the COVID period here where actually just for interest's sake, we can see it probably goes off the chart. Yeah, so there's COVID all the way up to 5 million jobs lost sort of month over month. But the point I'm trying to make here is that yes, you could argue it's going up, but still it's solidly within a range which indicates a robust labor market. So my point is that the Fed, can they cut? I mean, maybe, but let's just have a look and see what's going on here. So we've got 2.3 cuts. Now, you remember that it was about 1.9 or 2 cuts going back a few days. And essentially with that soft data yesterday, or what the market interpreted as soft data, the market is priced in an extra, sort of 8 to 10 cuts. So we're now at about 57 basis points of cuts by the end of the year, which of course is a shade over 2 cuts. So that's where we're at. We seem to be hovering around about the 2 cuts. And again, it's going to be an important 48 hours, because if the initial jobless claims comes in high today and the continuing claims comes in high, that's going to drive that market narrative that, the labor market is weakening, and it's going to reinforce the message we got from ISM services yesterday and from the ADP. And of course, if trend is continued tomorrow with the non-farm payrolls, that of course we could very easily get the market signaling or pricing in 3 cuts for the Fed this year, even maybe 3.5, something like that. That's going to drive the narrative. Of course, all of this could be reversed if, let's say, for example, today we get a low number in the continuing claims and the initial jobless claims, which is reinforced by another sort of strong indicator tomorrow from the non-farm payrolls. That's going to wipe away all of that sort of concern about recession and weakness and a weakening labor market. And this Fed pricing is probably going to go back down to, let's say 1.5 cuts, maybe even down to 1.25 cuts or so. So it's all about the data. It's a fairly binary kind of situation at the moment. And let's just look at a couple of charts. We can see what's going on. And what is interesting to me is, let's have a look here. If we go in and look at the equity, so obviously we've got the volatility down. Actually, we'll just have a quick look at volatility. We see that volatility is falling, and I just want to show you also the shape of the VIX futures here. Let's look at the VIX curve, which is this bad boy here. And what you can see here is that is, very much in a contango state. So you see the spot price here, we're down at about 17.7, well below the curve on the futures going out, which is only going up to about 21. So I would say that the baseline of the VIX is moving up, in the sense that we're not in the 12s and the 13s and the 14s, but we've definitely moved down a lot. And just by way of comparison, let's bring up from 1 month ago, which is after Trump's sort of a tariff announcement on Liberation Day. And you can see here so that's the or is that the 5th the 5th of May. So in fact, this is not after tariff day, it's a month ago. But you can see here that the curve is in a backwardated state here, and look at the levels at about 23 to 24. So the shape of the curve has gone into a much more defensive and more relaxed kind of shape, and the actual price of the spot has gone down a lot as well. So the VIX basically doing, quite well, although, as I say, the base price has gone up a little bit. So the market is still a bit nervous. So we have a relatively low VIX. And if we look at the ES here, what's actually kind of interesting is that even with the data yesterday, the sort of so-called soft data, you can see here that the market in terms of the ES didn't go down much at all. And if we look at NASDAQ, we can see that NASDAQ actually pushed up a little bit here. And it's just got me thinking, I'm wondering if what's actually happening, I mean, think about what happened with that massive drone attack of the Ukrainians on Russia the other day, which destroyed a lot of hard assets worth hundreds of millions of dollars for the cost of, hundreds of thousands of dollars in terms of the drone. And I think really what's happening here is that was symbolically a very big change. And it seems to me that like defense stocks, there's going to be a new way of doing war, and technology is going to drive that. So I just wonder if what we're actually going to be seeing in the stock market is simply if we get back to the ES here, is to say that there's got to be winners and losers, and maybe it's a market which is all about rotation here, and that things like technology and technology in defense, that's going to do very well. And you can look at things like, let's say, ITA, which is the defense and aero stocks, and look at that. Look at this chart. This chart is not going down in any shape or form. And I think in the last few days, I've showed that as a spread with the SPY. And so the point is here that you look at like these defense stocks, you can look at something even like I don't know, industrials like XLI, something like that. You can see that that too is trading along its highs. You can look at the financials are doing pretty well, and we can also look generally at the outperformance of technology, of tech, of the NQ versus the SPY or the ES. And so it seems to me that what potentially could happen is that if we get slightly bad news, it could be that the ES goes down a little bit, but the technology stocks actually hang in there. So it's almost like a spread trade kind of situation, a rotation situation, that the winners such as defense and technology and maybe industrials, where the Trump government the Trump administration wants to put their monies, they will continue to be relatively strong, but there will also be some losers. So it looks to me like sort of a spread trade kind of environment. And I thought it was interesting yesterday that even on the back of this news, you can see here that ES didn't particularly go down a bit. And as I said, the NASDAQ actually went up a little bit. And it's interesting if we look at the Russell, you can see the Russell it has been definitely the underperformer in the last a couple of months or so compared to the other guys. So if you look at the Russell here, we're just finding it hard to get above this sort of fib retracement and the 200 and 100-day moving average, where if we look at the NQ, you can see we're well above all the moving averages and almost back to all-time highs. So very different outperformance from the technology sector compared to the small and mid caps, more domestically based. So that's kind of an interesting thing today. Just while we've got all the charts up here as well, I just want to draw your attention here to the bonds. So we see the bonds yesterday. You can see they had a green day upwards again on that weak data, especially at the front end of the curve. You see the ZT here. So the 2-year equities went up a lot, but also all across the curve. So there wasn't actually that much movement in sense of the yield curve moving here. And you could see that the long bonds, so the 10-year and the ZB, the 30-year, all had good days, and the ultra bond, the extreme long bond, all did pretty well. And that's also possibly on the back of, we had a Japanese government bond auction last night. We had the 40-year. Now the government, or sorry, I should say the Ministry of Finance, the Bank of Japan, they actually had a slightly smaller issuance because they were worried about demand. And the demand wasn't great last night, but certainly the auction passed off without any hitches, without any problems. And so that sort of enabled the long end of global bonds to breathe a sigh of relief this morning. And so we're seeing the ultra long bonds doing pretty well. But my point being here is that apart from that sort of technical issue over with the Japanese bond auctions, that soft data yesterday gave a big bid in the bonds, but the equities didn't fall off too much. So I wonder if this is more sort of a technical sort of deficit spending, Fed kind of situation rather than the market, the equity market interpreting that soft data indeed as soft data and essentially saying, well, stocks don't mind if unemployment, goes up at 2/10 or something. It's not really a huge issue. Other couple of things I'm looking at here is just oil. Oil is an interesting one because we had some rumors yesterday doing the rounds of the last 24 hours that Saudi Arabia actually wanted to even sort of put more sort of production barrels into the market. We also saw an inventories number yesterday, which wasn't great in terms of the crude oil number was good. There was a big draw, but the refined products was higher than expected. So the question here is that oil popped, but it's finding it very difficult to get above this. It looks like about 63.80, that's 64 kind of dollar level. We see it's been here rejected a lot. So, but it is interesting if you look at the time spreads, and let's just look at a couple of those quickly. So if you look at the curve for oil here, so this is the WTI curve, and you can still see that even though the prices are not, accelerating, the curve is still very much in a backwardated state. And you see that the prompt contract here it's quite a steep sort of curve. So you see here, this is still indicating, quite a lot of positivity. It's certainly not a flat curve, and, we're very, very far away from being in contango. So this is still a relatively a sort of supportive kind of curve. And if you look at, let's say, another spread, you could look at something like the CL1 to CL6. So this is the front contract CL1, which is the white one here, and you can see that against CL6. So let's look at that, and you can see here that overall in the last kind of months or so, this spread has actually gone out in favor. It was down at about $1. It's now $2.73. It had got up to just over $3. But the point I'm trying to make here is that the front contract is trading with a premium, quite a healthy premium over the 6 months out. So, this is indicating the spreads here are indicating to me, you see it's in the 91st percentile here. So you can see that, relatively strong time spreads. So my point being that even though oil seems to be in a sort of bit of sideways choppy action here, it's not exactly collapsing, and the time spreads are doing sort of quite well, are quite positive. So here we seem to be stuck around, as I say, this kind of retracement level around about the $64 mark, which is also the 50-day EMA. But any sort of positivity here, I think oil could potentially sort of push a bit higher. And again, let's watch the data today and tomorrow. And we also have other things. For example, we have the German Chancellor Merz, the new Chancellor, who's actually in Washington today, meeting with President Trump. So let's see how that goes. Always interesting to look at the interpersonal sort of dynamics between leaders and Trump. And let's see if Trump tries to ambush him in the Oval Office, as he did with Zelensky and the South African president a couple of weeks ago. So that's interesting. If there's something positive out of that, we have the famous Trump President Xi Jinping call with China tomorrow. So there is also the potential for some positivity to come into the markets, and that would be good for the equities. And I think also something here like sort of oil could also benefit from that. Just while I got a couple of commodities, precious metals absolutely sort of on fire here. Let's have a look at the spot gold. You see spot gold pushing higher. It's making new highs. It's broken down at this trend or a trend line. All of the moving averages are very positive. At a minimum, it looks as though it wants to test this local high, then maybe also all-time highs against US dollars here, 3,400, 3,450, 3,500. But what's actually pretty crazy is that silver absolutely burst out of the blocks here. I guess it's running all of these stops you see here at around about $35.40 per pound here. So silver absolutely exploding here. And to be honest, if you look at the Fibonacci extension, which I think I showed yesterday, you see this Fibonacci measured move extension does extend up to this zones here, maybe even up to about $37 or so, even up to $38. So for sure, silver could extend a little bit higher here, but very powerful move out on silver, and also copper, at least the high grade, the US version, again, extending out of this Fibonacci retracement here and this recent lows. So sort of running all of these stops here. So sort of metals, both precious and industrial, doing very well. And that's probably a function, of sort of, still sort of the global sort of tensions and whatnot, and problems about debasing fiat currencies, but also the fact that the US dollar has been quite weak. The US dollar we see here, we'll just put it on the chart here, weakened yesterday. Let's just bring it up. So you can see the US dollar here weakened yesterday. And it is trading very heavy. So definitely from a technical perspective, it's failed at the, could even get above the 20-day moving average, failed here. If you look back on the 12th of May at the 50-day EMA, also this downtrend line, you see this sort of gray line here, it's failed there the last couple of attempts to get out there. So it's failing all of the technical hurdles, all the technical tests, and definitely, the trend is still downwards, which is not to say it can't sort of hover sideways consolidation or even push a little bit higher. And again, that's probably going to be a function of the data we get over the next 48 hours. Any softness in the data, I think the dollar index will push lower. And we're going to get things like the Japanese yen pushing higher. See USD yen here could fall on weaker data down to this 140 level. Now, just on the euro, we do have the ECB. Euro, it's interesting here. Let's just have a check and see what's happening. The market is pricing in the ECB this morning for a cut. So I'll just bring that up. What's my euro? I think I've got it here. Yeah. So if we actually just look here, what's priced in with using the OIS, the overnight interest rate swaps here, you can see for this morning's meeting, 25 basis points of implied cuts. So that's one full cut, 99%. So absolutely no surprises if they cut. Really, what's going to be interesting is going to be the forward guidance. There's even rumors that Lagarde may be leaving the ECB early to go and work as head of the World Economic Forum. We'll see what happens there. But if you just look out going towards the end of the year here, you see that the ECB according to the market-based measures here, is forecast to be cutting another 1.2 times apart from today. So another cut apart from today, bringing their sort of deposit rate, the overnight rate, down to about 1.6%, which of course is very, very low. So just keep in mind where we are with the Fed is 4.33%. And the effective rate here for the ECB is 2.17. So almost 200 basis points lower in terms of the overnight rate at the moment. So the ECB has cut quite a lot. And if we look at just brought up here the cheat sheet, which I always find kind of fun from ING, the Dutch bank here. Again, their base case here is for a moderately dovish, inflation projections to be revised lower. And it is true if you look at the inflation over the last sort of few weeks in the ECB, it's definitely sort of seems to be moving downwards. So that's going to give the ECB cover to cut today. And we'll see about the forward guidance. Lagarde notoriously likes to be very vague about forward guidance. They'll probably say they're data dependent. They need to understand more about what's happening with the tariffs. But definitely, inflation seems to be moving down in the Eurozone. And so that the updated projections we get today should reflect that. In terms of the growth, will Lagarde say that the balance of risks has shifted further to the downside because of the tariff stuff? We shall see what happens there. And just in terms of what's expected is, as I said, a 25 basis points cuts with no guidance. So it's interesting. What would be sort of more hawkish? You could look at that if you want to do a screenshot and look at that. They're obviously expecting there's all kinds of different scenarios there. But what is very much as expected is a bit of vagueness on the forward guidance, a cut, and just for Lagarde to say they're data dependent and need more information about the tariff situation. So that's about it for today. I just wanted to finish off, just interesting here. For those of you trading in the coffee market here, I just got some news this morning that Vietnam, which of course is one of the world's biggest producer of Robusta coffee, Vietnam's Robusta crop is off to a strong start due to heavy rainfall that could force the prices down a little bit. Also, just in terms of retail, that could push down, which is good news, price for espresso coffee. And it's interesting that Vietnam's Robusta output is forecast to rise 7% from a year earlier to a 4-year high of 30 million bags, according to the US Department of Agriculture. So just kind of interesting if we look at the coffee chart, which has been in a downtrend, and I'll just bring it up. So this is RC, put it on the futures here. RC, Robusta coffee. So as you can see here, rebounding, kind of interesting here, rebounding just this morning. So despite that sort of fundamental news, I wonder if that's sort of factored in here. But you see here the trends definitely sort of pushing sort of downwards, but we are at quite a oversold level. And as you can see here, where I wonder if this rebound here is just because we're off this sort of base level here of around about 4.3, 4.4. So it's going to be interesting here just to see whether that fundamental news of increased sort of crop output and production this will be a dead cat bounce here, and maybe the Robusta coffee will reverse here and break down through that level there. That's something interesting to be looking at. You see it bouncing off this sort of level there. Okay, guys, I'll leave it at that. So let's keep an eye out for what Merz has to say with Trump. Obviously, the data with initial jobless claims and continuing claims at 8:30. And of course, we have the ECB announcement at 8:15 and the press conference at 8:45. I'll leave it there. Have a great day. Hope that was useful, and we'll keep the conversation going. Thank you.